Welcome to TMS Insights. This is an international equities edition. We're going to bring you some updates from the fourth quarter of the US reporting season, which is largely through. But Ben, we've really seen some great results from companies that we started talking to viewers and clients about a year ago, and we started buying into a number of these names. We'll talk to you about some that we have recommended and some that we're looking at the moment. But let's get into some of these reports, some big names that everybody knows, whether or not you own them yet. But Microsoft reported, Ben, and again, we've been impressed by how Azure is going and how the growth in the cloud products are excellent. So let's talk about the result and then we'll talk about that Jedi contract.
So the result beat Wall Street analysts' expectations by about 20%. The profit was 20% higher than was expected, and there was expected about 20% earnings growth. I think the one thing I would say we've learned as we're sort of following these businesses is the earnings really jump around. And it's because these businesses will go through periods where they aggressively reinvest and the earnings will come in lower. And then there's periods where they just take the foot off the pedal in terms of the reinvestment. The revenue comes through, and you get these great jumps in profit. But the Azure thing is the big thing with Microsoft, and that was the highlight that everyone sort of spoke about post result. The Jedi contract, which we might talk about.
Let's talk about that.
Because we spoke about this on a previous video. This is the Pentagon project that Bill Gates said could be, sort of one of the biggest announcements in the company's history. Gives them the scale to then roll out a cloud offering at much lower rates to many other businesses.
And the credibility too. The credibility given by the Defence Department to one of a series of very strong competitors was substantial. So you can imagine a lot of other wins on the back that they're working for.
Particularly in defence. The issue that has come up is that, Amazon, Jeff Bezos was absolutely livid about the award. Trump, signed off on this contract. Trump and Bezos, can't stand each other. And so Trump gave it to Microsoft. Bezos has actually got a federal court has ruled that this project needs to stop the rollout.
The day before it was about to start.
And an inquiry is now being done into the awarding of this contract and whether it was done properly. So there's a bit of a question mark. Microsoft, after an incredible run.
Well, that's right. It's gone up very nicely, but it didn't really lose much on the back of that.
No, it's down a few bucks.
Again, so I think there's quality in the business, but we'd like to see that result. That takes us into Amazon now. Two things. One, exactly what you said about the ability to turn off the tap maybe on the R&D a bit. This was a total surprise how well, at an earnings level, Amazon did. We know it's generating enormous revenues and revenue growth, but it totally surprised on that EBITDA number, didn't it?
So the company actually delivered a number that was 100% higher than the Wall Street's expectations. So it was a phenomenal result, and we've seen a $200 kick up in the share price since. And what's driven that is the shipping costs. So Amazon is rolling out one-day shipping to Amazon Prime members, and they're wearing in the short term a much higher shipping cost to get those products to their members. As they're cycling through these quarters, the like-for-like costs are dropping. They're also getting more efficient at shipping. But the big thing that has happened as a result of this is they now have 150 million people have signed up to Amazon Prime. And that number's jumped about
20 odd million in the first day, wasn't it?
It's a jump of 50 million since they announced one-day shipping. So these people pay a monthly fee, but what they're also doing is they're ordering much more frequently through the Amazon website. And then you've got the AWS business.
And it's important to understand for Australian consumers in Australia, Amazon is nothing here yet.
No.
So don't think...
And I don't think it ever really will.
It may not be, but it probably will be in time. But give it a long time. To go to the US and see how it operates, which we did, you know how present it is. It's a major force.
And just the scale and size of it over there and the markets they're moving into. And I think that's one thing I have sort of found as people go, Amazon's not doing that well in Australia. It's such a tiny market. It might not work here. They're happy to go in, see if it works. If it doesn't, they'll pull back. But it shouldn't put people off looking at the bigger picture. And I remember when we're walking around New York, there is Amazon boxes on the front doorstep of every single place you walk past. It's extraordinary.
And the one thing on that valuation issue, Ben, I remember we said a year ago, was if they cut all R&D, they'd be on a P of 3 straight away.
Yeah.
So this company will eventually get massive returns from the investment it's making. Let's move on to Google. So Google, again, has been performing very well over the last year, really, and the result pleased the market.
Yeah, and I think this was about sort of 30% ahead of expectations. And if you're picking up on a theme here, it's that the earnings growth these businesses are delivering are a lot stronger than the market was expecting, but B, are a lot stronger than we're seeing back home, and which is one of the reasons we sort of consider them at a time when valuations of these businesses look fairly appealing.
And that's the point. So we're getting earnings growth we can't see. We're also actually talking tech stocks at the moment, but not only tech stocks in the US. But when we look at multiples that these companies trade on, a number of these names we're talking about in the US are trading on somewhere between half or in many cases a third of the multiples of the tech stocks listed here.
Yep.
So this is where the opportunity is real.
Yep, I think so. But look, Google had a great result, largely driven by the advertising, but also the YouTube business, which continues to hit its straps. But again, just as a statistic, and the reason we like the three is the cloud storage
They're
theme.
all players in this space. Yeah.
And there are only 3 players.
Yeah,
So that's something to be aware of. But Google's got about 5% of the cloud storage market in the Western world. If it were to double over the next 5 years, that market share to 10%, and if you take into account the size of the market, what that will grow to, it's forecast, if they're able to do that, that increase would be the size of the entire Google business today in terms of what the profit would be.
Phenomenal.
So that's where
this will happen.
is.
The point is, this will happen. It's just whether Google or Amazon or Microsoft get the business. But the cloud is growing exponentially, really.
And is guaranteed to do so. It's just who's got the market share in another 10 years. That's
and we don't ultimately know that, but we think we can invest in all three, and that's the point. Facebook's an interesting one. Obviously, it's been through a different year, but its share price still remains pretty solid. Again, some of the analysts were a bit mixed on this one.
Yeah, look, it came in bang in line with expectations. The stock has risen 60% in the last 12 months, so it's had a very strong run into the result. Facebook actually continued to see, there is this perception out there that the Facebook platform itself is maturing or is declining, but actually they had about 9% growth in users on the platform. There's about 2.3 billion people look at Facebook now every day. But where the continued growth in this business is starting to really push through is Instagram.
And WhatsApp as well.
WhatsApp, and so WhatsApp, I think I was reading that around half the world uses WhatsApp, some statistic like that. And WhatsApp is still very
they're not monetizing it properly in any way yet. So
Instagram is really starting to come through. You go back to valuation, Jeremy, what we were looking at. Facebook is trading on a EV to EBITDA of 10 times. Now, just to compare that with something locally, car sales is trading on an EV to EBITDA of 19 times. So it's almost half the price or multiple that you're paying. And this is a business with $80 billion in cash,
incredible.
No debt, and it's forecast to grow its earnings at around sort of 40% over the next 2 years.
Yeah, so it's certainly a lot of runway ahead of them for growth. Alibaba, we talked about them. Obviously, China issues, coronavirus are impacting, but this is a pretty special business, and we heard their call a few nights ago, which again, think of how we are so short-term focused here, and think of a company like that so long-term focused, building for the next 30, 50, 100 years, not the next 3 months.
Yeah.
A great company. Numbers were very good too, Ben.
It's been frustrating. I thought the coronavirus will put some pressure on the share price. It's trading very close to its all-time high still, and those numbers in that quarterly were outstanding. They forecast that they're going to go into a much weaker period as they deal with all of the issues that they're facing in China, but the market is just looking straight through it. And I'm surprised, to be honest, that the share price has held up so well. And I'd love to get this into clients' portfolios because I think this is a great business. It's the number one player in cloud storage in China, and it's 3 times larger than the second largest player. And it owns an assortment of businesses which you just really would struggle to find elsewhere. So, the outlook is fantastic. It's just getting at the right price.
Quick mention of Apple, which we haven't been as busy in. It had some good news after its result, telling its suppliers to actually give a lift next year, but then it's warned about coronavirus. It's in a pretty good spot overall.
I think so. It does have that big China exposure, which the first three we've just spoken about are much less exposed to. The first three.
Yes, that's right.
But I would say so Apple's downgraded its revenue guidance overnight. We'll see what the market does as a result of that, because it's had an incredible run.
Yeah. And if it's consistent, it won't be belted too much.
I don't think so. Yeah. So they own this incredible iOS ecosystem, and I think the market's really woken up to what that's worth, as opposed to just the month-to-month sales of the phones.
Yeah.
There's more to it than that.
Berkshire Hathaway reports next week. I think that still looks good value from a long-term perspective to buy. But to let people know what we're looking at, Ben, the stocks that we've been looking at of late include Visa, MasterCard. They're obviously payments companies of incredible magnitude and size. They look pretty interesting.
Really interesting. And what I think a lot of clients travel. So a lot of people would realise that Tap and Go is only was trialled by Visa and MasterCard in Sweden and in Australia. The take-up of Tap and Go has been absolutely phenomenal. I think like 3/4 of every in-store transaction is done with Tap and Go, and they get paid a 0.21% versus 0.14 if you slide your card in and type in your PIN. And a big growth engine for these companies is seen as they're going to roll this out in America, the UK, through Europe. So that's an interesting thing. But what amazed me about this company is 85% of transactions globally are still done with cash. And mainly that's because in the developing world, but in the developed world, 85% of transactions are done with card. So there's still a huge growth engine. And the quote I was left with are these two companies have got the railroads of the payments market globally. Everything ends up going through Visa or MasterCard.
Yeah, it's an incredible presence there. Spotify's another one we're looking at, and a couple of the big pharma stocks. We'll bring you more updates on those, but get in touch with us if you'd like to talk about any of those international stocks.